In this video, we'll reveal the game-changing Tesla stock strategy of Ron Barron, one of the world's most successful investors. You'll discover what he accomplished and how you can follow in his footsteps and immediately begin investing in Tesla stock. Ron Barron is the founder and CEO of Barron Capital, an investment management firm with over $50 billion in assets under management. He is known for his long-term buy-and-hold investment strategy, focusing on high-quality companies with strong growth potential. He has been investing for over 50 years and has achieved an average annual return of 15%, far outperforming the S&P 500 index. He first bought Tesla stock in 2014, trading at around $40 per share. Since then, he has steadily increased his stake in the company, buying more shares whenever the price falls. "I think we're going to make 3, 4, 5 times our money on Tesla from here," Barron said in an interview. Barron explained that he invested $380 million in Tesla between 2014 and 2016, at an average price of around $40 per share for a total return of approximately 20 times or $6 billion. Barron has sold approximately $1 billion in stock to diversify the portfolio in the 2 mutual funds that own it. Tesla now represents approximately 12.8% of its fund's assets under management. Barron also predicted that Starlink, Tesla's CEO and founder of Elon Musk's internet satellite service, will go public within 3 years. Barron also believes his funds will likely make 20 times to 30 times on SpaceX over the next 10 years, but he does not believe SpaceX will go public anytime soon. Barron now owns over 7 million Tesla shares worth more than $8 billion, a 200-fold return on his initial investment. Tesla stock is currently up about 80% year-to-date, sitting at a high value of above $170 for weeks. But according to him, this is just the beginning for Tesla. Ron Barron's firm is not only one of the top 20 Tesla shareholders, but according to filings, Ron Barron funds have a larger percentage of their overall portfolio allocated to the stock, about 11% higher than many other large shareholders who typically top out at 5 or 6%. Barron is a buy-and-hold investor, confident in his funds and their ability to rebound and continue to provide stellar returns, owning primarily to his large bets on high-growth companies. Ron Barron's Tesla investment strategy is straightforward: buy and hold for the long term. He considers Tesla a technology company disrupting multiple industries, including transportation, energy, software, and artificial intelligence. He believes Tesla is the industry leader in electric vehicles, battery storage, solar power, and autonomous driving. The EV giant possesses a significant competitive advantage over its competitors and a loyal customer base that enjoys its products. Ron Barron's Tesla investment strategy isn't based on short-term fluctuations or market noise. He is unconcerned with quarterly earnings reports or analyst ratings. He is unconcerned about competition or regulation. He does not listen to skeptics or detractors. He is only concerned with Tesla's long-term potential and growth. Aside from his bets on these companies, the billionaire investor has historically sought to invest in companies with average annual revenue growth of more than 15%. He also looks to companies that actively reinvest in their operations, which he sees as a positive sign for future growth. Although Ron Barron admitted that stock market performance has been poor in the last year, he described it as relative. Fears of a looming recession were a major hit for most company stocks last year, prompting most investors to sell their shares. However, Ron Barron advises investors to understand why they invest in a specific stock and its growth fundamentals. But why does he believe Tesla will become so large and successful? Tesla is not a small company, with a market capitalization of $623 billion. It is more valuable than all other American automakers combined. Despite large sales volume and an ambitious transition to EVs, the stock's forward price to earnings or PE multiple of 48 is significantly higher than that of traditional rivals like Ford Motor Company or General Motors, which have PEs of 7.5 and 6.7 respectively. Nonetheless, Tesla's valuation isn't as outlandish as it appears. As a pure electric automaker, Tesla shouldn't be valued like traditional car companies transitioning to the technology. These companies will likely cannibalize their existing gas-powered lineups with EV alternatives while Tesla enjoys pure growth. Tesla's relatively good growth expectations help further justify its valuation. Management expects vehicle deliveries to grow by an average compound annual growth rate or CAGR of 50% over the long term. This could translate to significant revenue and profit growth. Tesla's stock is no longer as cheap as it was at the start of 2023, after rising 58% year to date. However, a long-term investment strategy is key to long-term stock market returns, and despite the higher price tag, Tesla appears to be a good buy when you consider where it could be in 10 years. What are the advantages and disadvantages of investing in Tesla? Tesla is a pioneer and innovator in electric vehicles, which are expected to dominate the global automobile market in the future. According to some projections, electric vehicles will account for more than half of new car sales by 2030 and more than 80% by 2040. It is a diversified company that allows investors to invest in a diverse range of new and emerging technologies with a single stock purchase. Tesla develops and manufactures its battery systems, solar technology, supercharger stations, vehicle service centers, and self-driving software and hardware. Musk estimates that more than a dozen startups operate under the Tesla brand. Last year, Tesla began construction on its third manufacturing plant. The facility near Berlin is still under construction due to permitting issues. Regardless, it's all part of a bold and ambitious plan to produce 20 million electric vehicles annually over the next decade. This is more than double the capacity of today's dominant automakers. With a presence in Germany, Tesla will compete with the top car companies in America and Daimler AG, Volkswagen, and BMW in Europe. Competition in the electric vehicle or EV industry is heating up, prompting some analysts to predict near-term challenges for EV manufacturers in meeting consumer demand. Tesla has responded to recent pressures by lowering the price of some of its models. According to Reuters, the automaker reduced the price of some models by around 20%. This strategy is most visible in China, where cars are roughly 40% cheaper than in the United States. Tesla also operates service centers that provide quick and dependable maintenance and repair services. All of these strategies should prove very profitable in the long run. However, there are some downsides associated with investing in Tesla. Automakers have been dealing with shortages of semiconductors and parts due to the COVID-19 pandemic and historically high inflation. The latter has forced automakers to make a difficult decision: either eat higher material costs or risk reducing purchasing demand by raising prices. The point is that Tesla is facing production headwinds alongside legacy automakers and does not have any inherent advantages as it confronts the growing likelihood of the United States entering a recession in 2023. Although there is no doubt that Tesla has found a way to connect with EV buyers, otherwise it would not have delivered 1.31 million EVs in 2022, it lacks the branding power to connect with and engage consumers in the same way that legacy automakers do. After all, Tesla was founded only 20 years ago. Even with high volatility, Tesla seems a better investment than any other. How can you follow his strategy and start investing in Tesla today? Number 1, first conduct your research and due diligence on Tesla as a company. Don't just take Ron Barron's or anyone else's advice at face value. Discover everything about Tesla's products, services, finances, vision, and goals. Read their annual reports, watch their presentations, participate in their earnings calls, and stay updated on their news and updates. Number 2, having a long-term perspective and a strong belief in Tesla's future success would be best. If you're looking for a quick profit or are easily swayed by market volatility or negative opinions, don't invest in Tesla. Invest in Tesla if you believe in the company's mission and value proposition and are willing to hold it for several years or decades. Number 3, moreover, you must have a well-diversified portfolio and an effective risk management strategy. It means don't put all your money into Tesla or any other single